Well, last month I asked if you've been living on a deserted island. This month, I want to know if your deserted island was hit with some heavy tariffs.
It's time for a market update. Brought to you by Jeff L. with L Group.
Sorting through the noise and simplifying the data. Because when it comes to Tucson real estate, the numbers tell a story. Let's break down the latest market trends so you can make an informed decision about buying or selling in 2025. Yes, surprise, surprise, we still can't talk about the housing market without talking about tariffs and their impact on rates and prices. Since we last spoke, Liberation Day occurred, and many of us were liberated from the high value of our stock portfolio. That sent investors on a flight to security in the form of bonds, which caused the 10-year Treasury rate to drop below 4%, a level we hadn't seen since the middle of October of last year. As you hopefully know by now, mortgage rates track the 10-year, so a drop in the 10-year correlated in a drop in mortgage rates. But in the time you can say refinance, rates shot back up, likely caused by a sell-off of US Treasuries by foreign countries. As of the time of this recording, the 10-year has settled back down to around 4.2, 4.3%. Now I say all of this to reiterate what I've been saying for months. It is going to be a roller coaster ride for a while. So in the wise words of King Julian, raise your arms. It is more fun when you raise your arms like this. Core inflation continues to trend in the right direction. The Fed won't make any change in the federal funds rate when they meet early in May, although tariffs are likely to increase inflation, so we do expect 1 to 2 rate cuts later this year. All right, what does this mean for you? If you own a home and don't plan on selling or refinancing, it doesn't mean much from a real estate standpoint. If you're retired or planning to retire soon, our thoughts and prayers are with you. Just kidding. Be cool. If you're looking to buy or sell, we recommend you focus on your goals and not trying to time the market. If you find a home that you love, that fits your needs, lock it in. That's the goal, right? Once you're under contract, work together with your lender to determine the best time to lock in your interest rate. Keep in mind, it is very likely you will be refinancing in the next 2 to 3 years when things settle down. At the local level, so far we're not seeing any abnormal impact on our typical market trends. Sales activity and prices continue to increase coming out of the winter months, as they tend to do every year. In March, we added 2,100 new listings to the market, which is about 170 more than we saw added in February, and 250 more than we saw last March. After all was said and done, the total number of active listings came in around 4,578, which is slightly higher than last month. And for the median sales price, we came in at $367,000, up by about $3,000 from last year. And the average sales price was around $455,000, up 1.3% from last year. To round out the local numbers, the average time on market is around 55 days, and the ratio of list price to sales price is at 98.2%. Now let's focus on that number for just a moment. As a buyer, you can't expect to go bargain hunting and make a crazy offer below the market value. And if you're a seller, it doesn't make sense to dramatically overprice your home to allow room to negotiate. Successful sellers and buyers are coming to an agreement at a value just around 2% less than the listing price. For reference, at the current average sales price of $455,000, that would put the average asking price around $463,000. You can see what a small difference that is. As always, we're here to discuss your individual scenario to determine what could be the best move for you. At L Real Estate Group, we help busy people buy and sell real estate. Easier, simpler, better.